Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad, and the stock market is crazy and chaotic. We made it our mission to help you guys own it on this channel. And so interesting week ahead of us. We're going to get into all that good stuff, guys. But as you know, we're going to hit you up with the starting five. We got Jonathan Schreiber in here, Alan, Joe, Belay. I was almost said Joe again. We got Cardinal Weed, Mysterious Gal. You guys are our top five. Thanks so much. And no love lost with Charles Panea. He can go ahead and kick rocks. But for the rest of you, thanks for joining. Thanks for watching. We appreciate you. Speaking of Fat Man Zoom and his health, he's actually got some other stuff going on. This is still, like I said, when this all started, things have been fluid. And you know, he's decided on a procedure that will be taking place hopefully by the end of the week. They've had to push some things back because of if you guys recall, you know, his positive COVID test results and all that good stuff. So we had to mess around with some of that as far as scheduling and whatever else and second opinions and that sort of thing. But either way, I was just there. Either way, he's in good spirits. We had a great conversation. It's the first time I actually got to see him. He's at home. It's the first time I got to see him since Monday. And it was good. We had a great chat. He seems like he's in good spirits, and we're all still trying to stay positive. He did want me to relay to you guys that he is super feels really supported and loved by the community, and is really appreciative of all the love that you guys have shared with him and sent him and stuff. And so yeah, good stuff. And we're staying positive, and that's kind of like the update, guys. As things kind of change and keep coming, I'll certainly pass that along. But the main message was just continue to show him love and support, and he certainly is appreciative of all the messages and posts and everything else. So thanks so much for that, guys. I certainly appreciate it, and I know he does too. Okay, now that we got that out of the way, some really exciting things going on this week. We obviously are still in the height of earnings season, and we're going to get into that. There's going to be our top stocks to watch. I don't want to give us a whole list. It's hard to pick five. So we're just going to go over some of the earnings that are coming in through Monday through Friday, and I'm going to give you the ones that I like going into the week. And I think that will probably suffice for you guys instead of picking up a top five, because there's just so many good ones. I can't narrow it down to five. I just can't. As much as I'd love to, I just can't. But we have an exciting week as far as earnings are concerned. A couple of ones that stand out to me is Chipotle, Lyft, Peloton. Hello, what craziness is going on there? I'm actually creating a video for you guys that'll be coming out tomorrow on Peloton and some of the craziness that's been going on with that. Disney, Uber. We're going to get into all the ones that I am super pumped about, and ones that I think that could make the biggest moves going into next week, and maybe has the biggest pops off of earnings. Now, so let's see here. All right, that's cool. We're going to go ahead and get rid of Charlie. Thanks for playing. Bye. And so CPI data is going to be the big, thing to watch for. It comes out on Friday. And, I've been telling you guys over the last couple of weeks, really since December, that I feel like we're getting close to the peaking of inflation in general. So the consumer price index is expected to rise by 5.9% on an annual basis. This for the month of January. That'll be the highest jump since 1982. And I know that's really concerning. A lot of people are a lot of investors, a lot of analysts are kind of worried about that number. If it does come in much higher than that, I think that there's going to be an extreme amount of volatility regarding inflation and rising of rates, what the Fed's going to do about it. I actually put out an interesting poll. I think this is going to be a good video too. Interesting poll on Twitter. Go follow me at Own the Chaos if you guys are curious and want to check out anything that I'm tweeting about. Sometimes I'll talk about what I'm entering in and some of the plays that I'm excited about. If you guys want to go check that out. Plus, I talk about normal stuff like football and whatever's really on my mind. If you want to go follow me at Own the Chaos. But I put a poll out and I thought it was interesting. I essentially said, hey, what do you guys think? Are we headed into a recession or are we not? And comment your reasons as to why. And didn't get a whole lot of comments. I did get some that I thought were interesting, but there was about 100 votes and it was 56 to 44 in favor of no, not even close to being in a recession, or yes, without a doubt. I actually was surprised that it wasn't the other way around, just given the amount of negativity that I've seen on Twitter. And, everything I've seen on Twitter and really just social media in general, and especially YouTube. We can name some names of people who have just like instilled a shit ton of fear into the markets. And so I kind of wanted to see what's people's reasoning for one way or the other. Now, I think that there's some people that think that we're heading into a recession because of inflation and because of how we're seeing things play out. And that there's too much liquidity in the system. But then there's other people that are saying, oh, well, it's an election year. They're not going to, send the markets crashing in an election year, which I think that the only argument I would have to that is, the Great Recession took place during an election year, just an FYI. I don't know. Obviously, the Fed had nothing to do with that, but I don't know. I don't think that Jerome Powell is going to throw us into a recession anyway, but I just thought that was funny that everybody keeps talking about it being an election year. And I don't think that has honestly anything to do with it. To me, just my own 2 cents, the economy is as strong as we've ever seen it. And I think that we're still in the middle of an expansion. I mean, when you think about some of the limitations, some of the restrictions that we're still under, and, you have manufacturers talking about supply chain issues and chip shortages and that sort of thing taking place, we're still in the middle of this expansion, guys. I mean, we're still coming out of one of the worst economic contractions we've seen since the Great Depression, when we basically shut off the economy and told it to go to sleep for a month or two, and then tried to reopen it back up. And it's been slowly reopening. And some might make the argument that it's been rapidly reopening. And in certain cases, you can see that, right? But I think that when you look at how we're reopening, and there's been setbacks with variants continuing to come out with Delta and Omicron and who knows if there's going to be another one. I think though that we're past the types of variants, and I could be completely wrong. We never know really, but I think we're getting past the point to where these variants are becoming weaker and weaker, and we're just ultimately learning how to live with it. And I think that's going to continue to be the narrative moving forward. I think that we're getting into this endemic phase, and you could do all kinds of research on this and come to that conclusion for yourself. That's just my own opinion. I'm not obviously a virologist or anything like that, but I think when you look at, just how we're in the middle of this, like I said, this expansion, it's really hard for me to see a recession come out of that. Can it happen? Sure. But I think that the only way that happens is if we see something that's unforeseen, or something that we weren't expecting coming out of left field. If you would have asked anybody in 2007, you would have thought everybody would have told you that we were good and that everything was rocking and rolling. Nobody would have the collapse in subprime mortgages and the housing market. Nobody saw coming. Well, except for Michael Berry, right? But in this case, there's so much fear in the market still. And I still think that that's a pretty healthy amount of people that think 46% that think that we're going into some sort of recession. By the way, one person said that gave reasons as why they think we're going into recession. But, I think you look at oil prices, and we haven't seen oil prices this high that didn't follow a recession. But again, I think that's one metric that we're looking at. I don't think that the price of oil reflects inflation. I think if you make the oil argument, I think oil, in my opinion, is also a result of it being suppressed for a decade or better. We've seen prices go up in Big Macs, in Starbucks coffees or coffee. You're going to pay, you paid more for a Starbucks latte than you did 10 years ago. You paid for literally everything except for a gallon of gas went up over the last 10 years. And so now it seems as if energy is just kind of catching up with everything else. And then everybody wants to cry inflation. I just don't know if that's the case. I think it goes above 100. I don't think it comes back down. You could also make the argument that because demand's going up and we are moving towards EVs, there's a couple of crosswinds, I guess, going against each other here. When you have EVs going up and there's like this deterrence of going towards oil. So like there's going to be this shift. I don't think that oil is going to be something that you want to own for forever. But I think in the here and now, you look at, I'm kind of all over the place. Sorry, guys. But I think in the here and now, you look at oil over the next 5 years, and I don't think it comes back below $100. Just because we're not ready to just go full EV or full renewable yet. We're not there. Eventually we will be, but I think in the next 5 years, I don't think oil comes back down. I really don't. And maybe I'm wrong. Like I said, maybe I'm wrong, but there hasn't been enough arguments out there to make me change my mind. And I would love to hear you guys' thoughts on that. Certainly let me know. And by the way, let me just pause real quick. Madison Dix came back in Dixit, just came back to the crew, which I'll remind you guys, if you guys want to be a part of the Chaos Crew and support the channel and everything you see behind you, I certainly would appreciate it if you hit that join button next to subscribe. Every single morning, we put out a watch list for you guys, for those of you guys in the Chaos Crew. And it's 5 stocks that you can kind of keep an eye on that it's worth watching throughout the day and then beyond. We usually make our time horizons anywhere between the short and intermediate term. Some of it's long term, but it's very rare. And I'd say we hit on them pretty good. We do pretty good. And then I'm sure a lot of the folks who are in the Chaos Crew can vouch for that, but we kind of crush the watch list low key. I also do a live stream once a week on Thursdays. That's specifically for our level 2 folks. So certainly would encourage you guys to check that out as well. You get access to my whole portfolio and I kind of give you my game plan for the week ahead. So if you guys want to check that out as well, I certainly would love it for you guys to hit that join button next to subscribe, or you can go to ownthechaos.com as well. Steve King brings up a great point as far as this topic is concerned. There's not even enough material in the world for EVs to go right now completely. Yeah. And I think that there's look, nobody talks about that. Right. And maybe I should be the contrarian or, as far as YouTube's concerned, all I ever see is everybody talking about how Tesla is going to rule the world. And I'm not saying that they're not going to be the number 1 EV maker in the world, because I still believe that. I have never really changed my stance on that. But you bring up a good point, Steve. I mean, it's not just that, but there's also like competition. Ford's coming for them. And they're battling some supply chain issues. And there's a lot of arguments you can make against something like a Ford or GM. But the fact of the matter is that these car companies have been around for 115 plus years. And if you think they haven't gone through challenges and, whatever else, you got another thing coming and survive through all of that. So I don't think that they're going away. I think that competition is only going to get better or stiffer, I should say, stiff competition. And honestly, we should welcome that. We don't want Tesla to take over the entire EV market. At least we shouldn't want that. I mean, can you imagine not having to pay $115,000 for Model X? And that would happen if Ford and GM and Volkswagen and some of the other ones start to take up more and more market share. The competition is going to get tighter, it's going to get stiffer, and you're going to see prices of this kind of stuff come down. And that is the big risk, in my opinion, as far as Tesla is concerned, too, is that you look at that, and right now their profit margins are ridiculous. Those profit margins are going to get eaten into when they, A, have to come out with the $25,000 car, which they will, and they need to, and B, when they have to bring the price of their vehicles down because competition is starting to heat up. Again, I'm not saying that Tesla is never going to be number 1, because I do agree with that. But I think that if anyone thinks that they're just going to continue to sustain 50% profit margins, I don't know if I see that. I just don't know if that's sustainable, but could be wrong. Nothing coming out of Canada, says Philip. Just checking in some of the comments. Shane Haley says, I read that more people are hedged in puts rather than any other time. We won't crash when everyone's preparing for it. And that's a very, very good point. I just don't see it, man. I just don't see when you have demand like it is. And look, there's some sticky things about inflation, right? You're not going to all of a sudden pay somebody 25% more than what they're used to getting paid a year ago and then bring all that back. There's parts of inflation that are going to stick around, but I think it levels out. I don't think it just continues to go up. And I think that that's what people are worried about, that we're just going to continue to see this crazy trajectory of inflation just going crazy and haywire. And the Fed's going to take care of that to a certain extent, but I think it's also going to take care of itself, especially as we get through COVID, the COVID variants, and how Omicron really kind of slowed things down a little bit. But once we get through that, supply chains will ease, chip shortages will ease. It's all going to take some time, but it's happening. And I think when that happens, we'll start to see inflation come down a bit. Will it be enough for the Fed to not have to raise rates 6 to 7 times this year? I think so. I think it makes sense that we only see 1 to 2 rate hikes this year. I'd be surprised if we saw more than 3. And I've been pretty vocal about that. I think that, yeah, agreed, says Steve. Yeah. Bring some questions, guys. We got just changing gears here a little bit. So talked about inflation, talked about the CPI numbers that are coming out. Again, if you guys didn't catch that and you're just tuning in, we got 5.9% is what's expected. If we get anywhere, if it's 6-7 again, it's going to be really bad. We're going to see a lot of volatility. If it's below that, then my theory would be correct that we have indeed peaked. And I wouldn't be surprised if the markets actually rallied on that. I would not be surprised. And I would honestly be surprised if they didn't move on CPI numbers coming in below expectations. That would be crazy town. And I certainly wouldn't want to be out of the market in that event. I think that just kind of answers your question, Mad Dix. It says, inflation, Brad, what happens if we hit 7.3 this Thursday? Will we see a flush? I think we do, because the FANG earnings are done. So new news is coming in. I think so. I definitely agree with that. I'm looking at, so this is according to Yahoo Finance, Mad Dix. Here's the thing about Goldman Sachs and Bank of America. They always overshoot it. They always get way too hawkish. They always get way too crazy with rate hikes. They were calling for insane rate hikes in 2018, and that never actually happened. I think it was like Goldman Sachs said 3.5%, I want to say. So I don't really take what Goldman Sachs and JP Morgan says too seriously. They have intelligent individuals over there, but they get a little nuts. They get a little crazy with their expectations. Who knows? This is what I'm kind of keeping an eye on too. Stuart Castro says the 10-year notes at Treasury notes at close to 2, and that's something that I've said. From 6 months ago, I was expecting us to hit 2% on the 10-year note before the year end. We're only a month and a half out from the year end, and so I was close. But I think 2%, maybe even 2.5, makes a lot of sense. Sorry for the Discord. I forgot to turn off Discord. So sorry for the Discord chimes or alerts, guys. Okay. Some suggest that mega caps have room to decline, says Kirby. Kirby says some suggest that mega caps have room to decline, that growth stocks have less likelihood of declining given their steep drop. Yeah, I think there's parts of it that have certainly priced themselves in. I mean, if you would, it's kind of like, what would you rather buy? Would you rather buy Microsoft that's come down 20%? Or would you rather buy, I don't know, pick your favorite meme stock, an AMC that's come down 20%. I'm buying Microsoft hands over fist. Like, period. Like, it's not even a thing. So with that, let's get on to what's going on this week, guys. There's a lot of earnings that are coming out this week that I'm super pumped for. So Monday, we have not a whole lot. We got Take-Two. We got Simon Property Group, which I'm actually super pumped for. I got to do something about this. So, sorry, guys. I'm super pumped for Simon Property Group. I think Simon Property is going to be something very interesting to keep an eye on. So let's see here. Hold on one second. All right. Simon Property Group. Why am I excited about Simon Property Group? The big reason why is because of the reopening. I think it's a good reopening play, and I think SPG is a ticker. They have a really good dividend as well. Let's take a look at the chart. We take a look at this, and Simon Property Group is very interesting on the chart here. It's come down and retested 200-day moving average. They have earnings Monday after hours. We'll certainly be watching for that. But if you guys don't know what they do, they're basically involved in primarily malls, but the reinvention of the mall, so to speak. And so I think that this is going to be one that I would certainly keep an eye on. Looking at that 153, 154 area is going to be an area to watch for, especially as we get those earnings that come in. I think that we could see a pretty decent bump from them if they come in and talk about demand increasing, especially as people go out and want to actually shop in stores versus buying everything on Amazon. And this isn't for me to say that Amazon isn't one to own, but we've seen kind of like a slowing of growth in that area, or at least a plateauing. So I think that we're going to see more and more of that. We also have this week, or on that was Monday. I think Monday is probably the most noteworthy one, is going to be Simon Property Group. And so the next one, it'll be Tuesday. We got Pfizer in the morning. Pfizer, BP, Harley Davidson, and Aramark. Maybe Aramark will be worth watching, but Harley Davidson's going to be the key one, especially with the supply chain issues. But here's the big one: we got Peloton, guys, and if you guys haven't been catching some of the drama that took place on Peloton Friday after the close, some interesting things developed, and it seems as if Amazon might be interested and taking over Peloton. And then Nike comes in and says, well, wait a minute. If Amazon's going to be interested, then I'm going to be interested. So we have Amazon and then Nike. And now there's some rumors, I wouldn't say speculation at best, that Apple's going to have to make a move on Peloton. And so I think that I would say that that's probably true. I would say that Peloton's going to have to, or that Apple's going to have to make some sort of move towards this, I think. So what does that do for the stock? I really don't know. I think it's probably going to go crazy. It went up 26% in the after hours on Friday, and we could see some more craziness with this going into earnings. I think that that's going to be something very, very interesting. Hold on one second. Okay. I think I took care of yes, I did. Sorry about the Discord. I just joined a new Discord group and it went crazy. So this is going to be very interesting. I definitely would want to get your guys' opinions on this. Does Peloton get bought out, or is this all bullshit? Do they get bought out by somebody or nobody? And who is it? So I definitely want to hear from you guys. Put your comments in the either in the chat or in the comments below if you're watching this later. But very interested to see how Peloton shakes out. Again, after hours on Tuesday, Chipotle also will be interesting because this will be weird, I think, just because they've done so well. Now they've had a pretty decent correction, and their last earnings were actually pretty good as well. But I don't know. I don't know where Chipotle goes from here. There's going to be some issues, especially when it comes to extra costs incurred with raising wages and that sort of thing. So I think that this is going to be very, very difficult to kind of keep an eye on. But that's Chipotle, or difficult to kind of really be excited about going in the earnings. Corsair also has earnings after hours on Tuesday. I'm not necessarily excited about those. XPO Logistics. This is one that I am excited about. Because they've just gotten absolutely hammered. And I think that the bar has been set so low for XPO Logistics. If you guys don't know who or what they are. They're in the transports sector. So the industry there, the trucking, all that good stuff. And if you guys, here I go saying all that good stuff again. Nobody told me to take a drink today, and I know that's not the first time I said it. But looking at this, I think that there's definitely potential for XPO to really go off, especially if they start talking about supply chains, kind of like seeing the end of the tunnel there and really kind of getting them back out to work, and less incurred costs is really what's going to help XPO here. And so that's what I'm looking forward to. Am I owning it before earnings? No, because obviously there's that inherent risk of, costs due to increased wages and keeping truckers and then hiring truckers because of just insane demand. I think there is that risk there, and I think it's too great to own before earnings. But believe me, this will be something that I think would be really, really interesting to watch after earnings. And if I don't get in off the bottom, so be it. But this is definitely one that I'm currently interested in watching and potentially entering into if they have good earnings. Then you have on Wednesday, CVS. This is just that time of year to actually really own CVS. I don't know if I'll be buying it all the way up here, but this is going to be one to watch. We also have Canopy Growth. I'm not really interested in Canopy Growth. I don't know if they really go anywhere. It's just, if there's a weed stock to own, you guys know that I like Canopy Growth, but just the industry in general has been really, really tough. That's Wednesday morning. Here's when it starts to get exciting. Okay. We got Disney. And if there is any light at the end of the tunnel here, as far as demand, coming back, especially with their parks, that's going to do really well for Disney. But I'm really actually concerned about Disney and the issue revolving around Disney Plus. This is kind of right around where Disney was before Disney Plus came out, I want to say. Let me back this out. So Disney Plus came in 2019. Was it 2019? November 2019, I believe. And that was right around, it was November 2019. So here is the October 31st of 2019. Disney was at $130. Now, this is when the parks were fully open, no restrictions, no nothing, with no Disney Plus. The stock was sitting at $130. Disney Plus comes out. You can obviously see that it started to make the really nice move, and then COVID came in, just like everything shit to bed. So this is a monthly chart, and then it went all the way up to $200 a share, to, I guess, in anticipation of parks potentially opening up. Delta hit, and then that kind of, you know the story after that. And then we have Disney Plus with subscriber growth kind of like plateauing a little bit. To me, I don't think Disney Plus investors, and obviously it doesn't always matter what I think, but I don't think investors should be looking at Disney Plus in the same light as they're looking at like a Netflix, for example, because the parks side of their business was the number one revenue driver for Disney pre-COVID. That's going to happen again. That's going to happen again. And if Disney starts to paint a picture that the parks are really opening back up, and that's kind of their big money maker is going to continue to take that, they see a path to it taking that top spot, then I think Disney's going to be in really good shape. The cruise lines should be opening up again, so I'm sure we'll hear from that. My hope is that investors don't just look at the Disney Plus numbers and then punish the stock for it, especially given the fact that we are pretty damn near close to what we were at pre-Disney Plus, not just pre-COVID, pre-Disney Plus. So that's kind of like the mind-blowing part about it for me. Does Disney deserve to be down here? No, I don't think so. And I think it should be around $220 when you put everything together. To me, I think it's going to have to depend on how the CEO, Bob Chapek, really kind of paints the picture here. And we've seen this, right? We saw it with Apple. Apple was a little bit wishy-washy. Tim Cook comes out and says everything's all good and the stock goes up. I know it's not an apples to apples comparison, but we've seen how CEOs can communicate to investors and the stock goes crazy. So I think that's probably the dynamic that we'll see with Disney coming in this week. Rudy Brown says Disney has been beat down since this time last year. I know, man, and it's just kind of crazy, right? I mean, we saw this $200 level, 203, March 9th. That was my birthday. This is when Disney peaked, was on my birthday of last year, and it hasn't come back since. I think that's kind of my thoughts. on that. Also on Wednesday, we have Uber, Twilio, Zynga, Mattel, Sonos, MGM Resorts. MGM Resorts is going to be one to certainly watch for. I think the casinos are primed to break out, especially as things start to reopen. And I think it's just going to be an incredible summertime, not just for MGM, but for travel in general. I bought Airbnb Leaps. I'm back in Airbnb, baby. And I think that's going to be something that I hang on to because it's going to be a great year, I think, for travel in general. I want to be in something in that space. So Airbnb is it for me. You could also put Disney in that category, but MGM, aside from Penn National being our favorite casino play, MGM's second. And if you ask Fat Man Zoom, it's still his second too. So you look at MGM, they have the best balance sheet in the business. They come in and talk about numbers in Macau, and then very clearly the numbers in Vegas. Those are going to be two areas to watch for on MGM. I'm super pumped for that. I think that the casinos have just been beaten down so much. And really, when you want to talk about a top performer as far as the stocks in this space are concerned, MGM has just done an incredible job of not really being all that volatile. I mean, the stock hasn't really moved as much when you compare it to something like a Wynn Resorts, right? Look at that. Wynn Resorts is in the shitter. Caesars also in the shitter. MGM has just been steady Eddie because of what they have going on. They have really good management. They have an incredible balance sheet. And yes, they're in sports betting. That side of the business isn't projected to make money probably for the foreseeable future. However, they are marking their territory in this space. So MGM is definitely a solid one to own. And I'm super pumped for their earnings this week as well. You have on Thursday morning, Twitter, Coke, Pepsi, Datadog, AstraZeneca, really nothing else that I would be super excited about. Twitter kind of moved. Twitter was, I don't know. It was in a crazy week. Obviously, you can see that it had a really nice move, and then gapped down on Facebook's earnings, and then gapped back up on Snap's earnings. So who knows what's in store for Twitter? I'm not optimistic about it, to be honest with you. Twitter's not the one that I would own. I think going back into Snap and seeing how, it's had a huge move, obviously up 39% is what it closed at on the day. Went all the way up as much as 60%. This is actually the one that I would own in this social media space. I actually bought some Facebook last week on the dump, and I think that that's going to probably pan out too. But you can't argue with a company that makes money. And I think that if you're looking at this, Twitter has had a really tough time doing so. So I probably would still avoid Twitter. It may run on some good news or what have you, but I don't know. I'm really kind of nervous about that. And then I see Steve King talking about Affirm. They have earnings on Thursday after hours, which I'll be live for at 3:45 p.m. Eastern time. So guys, make sure that you're hitting the notification bell, hit that subscribe, and to get notified when I go live for these live reactions every day, Monday through Thursday on our live streams. Freddie will be here for that day as well, so I'm sure he'll have something to say about Affirm. But this is interesting. It's a company that doesn't make any money, but has been beaten down so much that it actually looks pretty attractive. I mean, we're talking about this is hanging out at levels now in which, this is pre-Amazon partnership, pre-Apple partnership, pre-Visa. They are so attractive right now. And I've talked to you guys about this. I don't think Affirm is actually going to be bought out. And I think if they did, then somebody's paying a stupid amount of money for them. They've gained so much attention from the big players that have to do with anything that deals with making an online transaction. Everybody. So, and I honestly think that this is probably what's hurt PayPal as well. Twitter's trash, says Steve King. Yeah, it really is. They just have a hard time making money. But Steve King says also Affirm up 8% Thursday. I'm calling it. Yeah, I think it could be up 8%. I think it could be up more depending on how well they do. This is one of those exceptions to the rules. Remember when I was saying back in December, I was like, listen, in a rising rate environment, the stocks to own, in my opinion, would be ones that are making money and don't have a crazy high multiple. Affirm check both of those boxes as far as having a crazy high multiple and not making any money. And that's why I said that I wouldn't be touching Affirm until we see some sort of correction. Obviously that's happened. And I think that we potentially seen the bottom here. So I'm not saying that it's time to go into all, speculative stocks, or at least stocks that don't make any money. But I think Affirm could be that exception to the rule here because of just how far they've come down and everything that they have going on. If they come in and shit the bed on their earnings and say, hey, we don't know what's going on, like we're not growing, then, obviously, what'll happen to the stock. But I really struggle to find a reason why their earnings won't be good and can't be good. So I think that there's a lot to like here. And I would watch for this on the chart here. If we're looking at the daily chart, you obviously can see how oversold this became. And then Visa came out with the partnership with Affirm, and obviously it's had a pretty nice bounce back since then. So I'd watch this area. It's actually kind of struggled at $65 to kind of really sustain above that. But then I'd also watch here. If it does get above 65, 73 certainly will be an area to watch. You can kind of see the 50 and the 200-day moving average are diverging on each other, which is at an interesting spot here all the way up at $90 too, which was the previous support and resistance. So that's an interesting observation there. But those are the two areas that I'd watch for. You can obviously see at 58 too is a nice area of support. But yeah, I just think that they have so many good things going on that this would be the exception to the rule here, in my opinion. We also have Cloudflare on Thursday, Upwork, and Callaway. I think Callaway will be interesting, the one to watch, but really Friday morning is going to be interesting as well. I think that that's something that should certainly be on everybody's radar, and that is Cleveland Cliffs. Now, this has had a really rough go of it, but to be honest with you, it's kind of really remained in this channel with the exception of a brief period in time. But ever since it fell out of the channel, it got right back in, and this looks great on the chart. I think materials are going to continue to be the types to be an area to own, whether it's Applied Materials or whether it's Alcoa, which went crazy, 52-week highs last week. Cleveland Cliffs, I think, is also going to continue to be one to own. It has fallen out of favor of a lot of investors as of late, but I think they make a really nice comeback, and those earnings are on Friday morning, so that's going to be something to watch for. Under Armour also has earnings on Friday morning. This is one, you guys know that we love Under Armour, one of our favorite ones. It fell below support here around $19.80. I think that gets right back above there. If Levi's earnings, here's why I think that Under Armour could do really well. Levi came in and crushed earnings. They did really well on theirs, and I think that should be an indication of how well retail should do in general. I know that Under Armour isn't even in the same vein as far as type of retail clothing, but when you consider demand there, I think that Under Armour certainly should be there. I don't think they deserve to come back down from their $27 highs. I think that that was appropriately priced. You take a look at their forward PE, it's sitting at 25, 26, compared to something like a Nike or a Lululemon that's sitting in the 40s and 50s. This is cheap, in my opinion. I think Under Armour is still the one to own, even though maybe some investors don't really like it. And that's the week, guys. That's the week. A couple other things that I think that are worth watching. Obviously, energy. I'm looking at futures right now, and everything kind of like it started off green rather, and it's now turned red, but not much. It's pretty flat. Oil's down around 1% or so. Who wants to take bets on whether or not oil hits 95 this week? So my marathon oil trade is on absolute fire. I'll probably be rolling that up once those calls expire. I'm up over 100% on those calls right now. I have 19 and a half calls that expire in about 2 weeks. So probably end up taking those and rolling them up into into a new position on marathon. Going to continue to hang on to that. I don't think energy or oil goes anywhere anytime soon. Great point that Rich brings up. Just kind of looking at some of the stuff you guys are talking about. It says, if any company doesn't have amazing earnings, they're in trouble. Look at Facebook. Great earnings at the moment equals sideways moving stock. Yes and no. Apple's still doing well. I mean, Amazon went crazy. There's some stocks that went up and then sustained those moves. The only one that I was surprised about was Google. Went up and then came back down. But you make a great point. PayPal got absolutely punished, right? Came down 20%. Facebook got absolutely crushed, came down 25, 27%. There was another one that got, Netflix got hammered until Bill Ackman decided to drop $1 billion on it. So yes, I would agree with you. In this environment, given the a lot of the fear and the volatility that's going on in the markets, the stocks that don't perform on earnings are going to get hurt that much more. They just get absolutely punished. So I think that those are going to be certainly things to look out for, is that if you're not confident in a stock that's going to outperform on earnings, then I probably would avoid either being in them or buying them altogether. Just my 2 cents. Stuart Castro says Iran might be able to put oil on the market, could bring oil down. Maybe. I just don't know if that happens. That's a big if, my man. Clorox, yes, another good example of one that got crushed after not really a great earnings report. So you guys are really chatty. I'm loving it. Johnny R says Affirm has figured out how to make money being an always no interest credit. Yeah, they will either be, they do charge interest, I thought, unless you have like ridiculously good credit. I think you have to have like 850 credit to not pay interest. They will either be a game-changing company the way Robinhood has been for investing, or it'll be outlawed in 5 years. Yeah, no kidding. I thought they charged interest, at least a little bit. I could be wrong. Alan says, or Rudy says, oh, no, sorry. Rudy was talking to Alan. Wakar Naweed. What's up, Wakar? I'll tell you what, Wakar Naweed lives across the pond, and he still shows up to my level 2 streams, which for his time is like 1 a.m. That's how dedicated this guy is to this channel. If you guys want to be just as dedicated as Wakar Naweed, hit that join button next to subscribe and join level 2. If you guys want to check out my portfolio and just hang out, sometimes we just shoot the shit. We can talk about whatever we want in the stream, but I also give my outlook on the week ahead. So if you guys want to be a part of that, hit the join button next to subscribe. You just help support everything you see behind you, the studio, the channel. It's what keeps us going. So certainly appreciate what Cardinal Week, but he says, I've increased my position in BP with their earnings coming up shortly. It should do well on the basis how Shell did with others. Of course you would pick British Petroleum. Why am I not surprised? But yes, I think that literally you could own anything in energy and it's probably going to do well. I couldn't tell you which ones are going to outperform what, but the reason I got into Marathon was because their break even as far as profits concerned was at $35 a barrel. So if oil is above $35 a barrel, Marathon makes money. And obviously we can see that Marathon is doing incredibly well on that front. We just saw ExxonMobil report earnings last week, and they talked about revenues being $40 billion more than it was year over year, than the year before. Sorry. So that is just incredible to me. And I think that that probably continues with something like a Marathon Oil. So it's nice and cheap. Earnings or the options are kind of wishy-washy as far as volume is concerned and liquidity, but still works. So that's gonna got Affirm charges late fees. Okay, thanks, Mike, for clarifying that. I couldn't remember if they actually did charge interest on those. We got Philip Stroh, GoPro, and AT&T had good reports and still got hammered. Yeah, well, it depends on their outlook too. It depends on their outlook. And AT&T was a little bit different because they were spinning out what the HBO side of their business, right? Rudy says, I can't see how any oil stock doesn't do good once oil opens tomorrow above 93. Ooh, you're saying 93? That's possible. It's possible. I mean, we just saw OPEC meeting last week, and it was, it's business as usual. We're not increasing outputs, nothing. We're just going to keep it going. So it's possible. And maybe we see 95 this week. Maybe we do. Great question here, says the 1D. 1D Lee. Do you have a worst case scenario regarding the Russia-Ukraine? Worst case scenario is that we all go to war. I don't know if there is a more worst case scenario. But a best case scenario is that nothing happens. Somewhere in the middle, I think, is maybe where we see this play out. Who knows, though? I mean, Putin has not followed through with anything that he's ever threatened anybody with, the exception of the invasion of Georgia. And how long did that last, right? 2 whole weeks. That was in 2008. I was actually in Russia at the time. I was in Moscow when Russia was invading Georgia, the country. And that was a wild time. But, sanctions came in. Everybody in NATO and the EU told Russia to get the fuck out of there. So they did. And I think it could be something similar here. I don't think it's going to be anything that will materialize in anything serious, but I do think that there's potential for it to affect the markets if they at least start poking the bear a little bit more. But yeah, I don't know. The one D Lee says, where are all those likes? Yeah, hit the thumbs up, guys. We got about 140 of you guys hanging in here. So I certainly appreciate the support, but hit the thumbs up as well if you're liking the stream. And it's weird, man. I feel like it's been a long time since I've done a Stock Watch Sunday. No, I did one on about 2 months ago without Fat Man Zoom. But it feels weird being in here alone by myself. I mean, I know this is what I used to do right before Fat Man Zoom, but you do it for so long and it's just weird. Still getting used to it. I did already cover Disney housekeeping. I think that's going to be it, guys. So we got lots of exciting stuff going on. If you guys are just tuning in, we went over all the earnings that are going to be happening this week. I also discussed my thoughts on CPI data and how that could affect the stock market going into this week. CPI data comes out on Friday, I believe. Somebody correct me if I'm wrong. I'm pretty sure it's Friday. And I'll be live tomorrow, 3:45 p.m. Eastern time, to go over earnings that are, again, let me just remind you, we got Chegg tomorrow afternoon. That's probably not going to do well. Take-Two might be interesting. And Simon Property Group. Those are going to be the three that are probably the most exciting to talk about. We can also talk about the next morning, which will be Pfizer, BP, Harley Davidson, Cisco maybe. Cisco could be interesting. And Aramark. Aramark is an interesting one. I know we didn't talk about it because that wasn't something that I was super pumped about. But Aramark will be interesting because if you guys don't know what they do, they actually process payment or POS systems and kind of like catering business as well. The Ravens stadium actually uses Aramark in the stadium. So that would be interesting to see how much traffic and growth they're getting there. As demand come back enough to really do well for Aramark. And I think it could, for sure. I mean, when I was at the stadium, when I went to all the games this year, it was wild. I mean, packed. So that'll be something certainly to watch for. But ready to bounce in the Easter socks, says Joe Tech. What do I think is going to happen to Peloton? I'll give my final thoughts on this. Some people might not like this. I don't think it does shit. I think Monday we see a pop, and then I think the noise maybe gets quieter. Unless Apple comes in and says, I want in on this table. If Apple comes in and says, I want in on this table, who the hell knows what does Peloton go back to $100? I mean, what was it at? 25, 35, somewhere in there. Peloton. Yeah, 25. 2281 is 52-week low just last week, 2 weeks ago. Does Peloton go to $100 if Apple wants in on this? All right, guys, that's going to do it for me. Thanks so much for tuning in. Make sure you hit that thumbs up on your way out the door. Again, I'll be here tomorrow at 3:45. And don't forget to hit the join button next to subscribe, just like Madison Dixit did today. And thanks again for signing back up, brother. I appreciate it. And that's going to do it for me. I'll see you guys all tomorrow. Bye.